There was an interview in the 21st floor of a building where an interviewer asked a question to a chartered accountant. He asked, imagine, what will you do if there is a fire in a building? The chartered accountant replied, I will disturb imagination, sir. Hello everyone, it's me, subash44nirc, all the way from Delhi. Today, I am going to make this presentation, this video, for the CA National Convention going to be held at Karnal branch of NIRC of ICI, where I am going to present my view, my thought, my opinion on the Section 44 of the Income Tax Act 1961. Before starting my deliberations, I would like to quote the quotations that the difference between winning and losing is quite often not quitting. So dear friends, keep trying, then we will get the success of one day. There is no far away from us. So let me start my deliberations by these Income Tax Act 1961. Income Tax Act 1961 is basically made for the people, to make them binding upon the law, rules and regulations to pay the income tax for the government. As you know very well that the government has a plan, policy and the development work for the citizens, for the people of their nations. So they have a fund to be collected. That's why they have a source of the income tax that they use to collect the revenue for the executions of for the work that is benefited for us. So dear friends, in the section 44 and its entire series, we have to think that it's something special provisions that doesn't only cover to the residents of the nations but also the outsider of the nations. Think about those persons who come in our nation for the short span of the time and execute their profession, their work and their business with utilizing our resources. Then what do you think, that they do not have to pay the tax? No, my friends, they have to pay tax. They are liable to pay tax once they have used our resources. So dear friends, our revenue authority thought of the section 44 and its entire series for making them to pay an income tax. So dear friends, with starting the very first section of the section 44, it says about the insurance business. Any SSE which is carrying the insurance business has to pay the income tax as computed as per the first schedule of the Income Tax Act 1961. For the next section, section 44 subsection 1 says that every person, the engineering, legal, medical, accountancy, consultant, interior design or any other profession business is specified by Central Board of Direct Tax, CBDT, has to maintain and keep the books of account and other legal documents as per the Income Tax Rule 1962. Whereas section 44 AA subsection 2 says that every person other than the person specified in the subsection 1 has to maintain and keep the book of accounts and the other legal documents if the business or professions exceeds the income 1,20,000 or sales, gross receipts or turnover exceeds 10 lakh in any of the any of a year of the 3 immediately preceding previous year, has to keep the books of account as per the Income Tax Rule 1962. However, section 44 AA subsection 3 says it does not apply, the subsection 2 does not apply to those SECs whose income does not exceed or likely to be exceed 1,50,000 in a year or any one of the 3 immediately preceding previous year for the existing business and newly set up business. So moving ahead, there is a section 44 AF who says that any SSE who is conducting the retail business of any goods or merchandise business, then the sum equal to 5% of the gross turnover is deemed to be a income chargeable under head PGBP and has to pay tax thereon and specified in the Income Tax Act 1961. Provided that the SSE whose turnover exceeds 40 lakhs in a year, then has to pay the tax. And moving ahead, there is a section 44 AV which says about the tax audit. If the SSE, if a person carrying a business or the professions exceeds his total sales, turnover or gross receipts are more than 1 crore or 25 lakh in a previous year respectively, then they have to get his books of account to be audited by the chartered accountant. Similarly, there is a section 44B which says about shipping business. if any person, if a non-resident carrying the business or operations of the shipping business, then he has to pay some equal to the 7.5% of the amount received or receivable in the any port of the India, or for the rendering of the services, or then the amount deemed to be received or receivable and any outside of the India, then 7.5% of the such total income is deemed to be the profit again of that person's or business as per the Income Tax Act, chargeable under head PGBP. So my dear friends, there is altogether 13 sections. It's a series altogether where the section specifically 44AC has been omitted by the Finance Act 1992 with effect from 1st day of the April 1993. Then the 12 sections are still applicable to all those assessees and has to pay the tax thereon. And there are a lot of provisions and the circumstances where the assessee has to pay and not to pay the tax. So dear friends, the more discussion will be on your branch, on your auditorium, on your platform from my side, and I will give the best as I can do. And if I am selected, then I will be there for discussing the more and more provisions and the sections about on the Income Tax Act, Section 44 and its series. So for these short video clips, I would like to end my deliberations with the quotation of the Orphan Tofel, who says that the illiterate person of the 21st century is not those persons who can't read and write, but my dear friends, but those friends are illiterate who can't learn, unlearn and relearn. With this a beautiful quotation, I like to thank all of you for the patient hearing of me and listening me. Hope you see all there in the conventions. Thank you so much.